Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here. I'm John Sneisen, and we decided to kind of break down 11 reasons why U.S. economic growth is the worst that it has been in 3 years. And it comes from the economiccollapseblog.com. However, we're going to elaborate on it greatly. So we're going to start with number one. So, number one. The weak economic growth in the first quarter was a continuation of a long-term trend. Barack Obama was the only president in history not to have a single year when the U.S. economy grew by at least 3%, and this is now the fourth time in the last 6 quarters when economic growth has been less than 2% on an annualized basis. So essentially, this latest number signals that our long-term economic deadline is continuing. So, John, can you go into a bit what number
first of all, the U.S. And Canada and other Western countries is in a demographic cliff. So, the economy is shrinking naturally because people are starting to sell off their assets. They want to downsize. They're getting older. They don't need all this massive housing that they stayed up with all the kids that they might have had. So we're in natural deflation, and of course that population is bigger than our current population, so you'll see a downtrend and a deflationary pressure there. Now, of course, John Williams of Shadow Stats has put out numbers that are real growth numbers, really, that I like to follow. And what he is showing is that he's showing sometimes negative GDP growth, which means that the United States economy is not just growing minuscule, but it's actually in a negative contractual basis, the whole economy.
Yeah. Okay, now let's go to number 2. Consumer spending drives the U.S. economy more than anything else, and at this point, most U.S. consumers are tapped out. In fact, CBS News has reported that 3/4 of all U.S. consumers have to scramble to cover their living costs each month.
Yeah. Well, there you go again. So, when it comes to the consumer debt, for example, it's at a record high again. It's hitting like right around the pre-2008 crisis levels. So I think that's kind of a maxed out level of what the population can get into debt before it collapses. Mm-hmm. So that's what we're seeing right now. And of course, there's massive amounts of retailers that are shutting down all across the United States. Yeah. You have Macy's, Sears, Best Buy, there's so many more, of course, that I could mention. There's, I think, thousands upon thousands of these stores that are shutting down because the economy is slowing down. People got into so much debt that now they can't afford anymore. And remember what happened in Tunisia and other places in France back in the French Revolution, when people get to a point where they can't afford to buy food anymore, where they have so much debt in both housing and other, like the Americans have got into so much more debt with auto loans and all this. You're going to hit a point where it's going to collapse in on itself. And I think we're getting to another point where massive debt expansion again, stupidity, and of course higher inflation. People had to literally be able to afford things. They had to get into debt.
Yeah, absolutely. And of course the markets are so incredibly manipulated, and we're watching things like Macy's, as you mentioned, and Sears and Target and all these other stores kind of start to falter under the weight, and we're going to see it continuing to happen. But I find it interesting that this coincides at the same time as all these major businesses, conglomerates, are buying up other conglomerates.
And like Amazon, for example, they're buying up the scraps. They're expanding hugely because, of course, the online side of things are growing, and the old retail style of things is going out of style, of course. But it is. I think it's quite minor compared to the real fact here that they're talking about the consumer spending is going downward.
Okay, well, number 3. The job market appears to be slowing. The U.S. economy only added about 98,000 jobs in March, and that was approximately half of what most analysts were expecting. John?
Well, what's happening right now, you have unemployment supposedly being very low. The problem with that unemployment number in the United States is that it's not based on, of course, real unemployment. If you, for example, haven't looked for a job in, I think it's 60 or 90 days, well, you're not unemployed anymore. Magically, you get erased from the unemployment number. So what you really have to look at is, of course, the worker participation rate number. And for the major working age males now, in the United States, they are radically losing their job, like going out of the workforce. And of course, the number itself is at some of the record lows has ever been, like in the 60s, almost, like close to the 60s. So that's 60% almost of people, while there's 40% that don't really have a job.
Absolutely. And it's totally insane. We are testing John's knowledge a little bit here because we didn't really go over this too much.
I don't even have the numbers.
We're just ringing out questions.
Trying to come up with it as we go.
All right, number 4. The flow of credit appears to be slowing as well. In fact, this is the first time since the last recession when there has been no growth for commercial and industrial lending for at least 6 months.
Yeah, and what's happening there again is we had a massive expansion, first of all, when it comes to corporations doing share buybacks to prop up their prices, which is insane. They went into debt to prop up their stock price. They didn't innovate. They didn't create anything of value or expand, really.
The death of the free market.
Yeah, it's the complete death of the free market because they have to manipulate their stock price in order to keep this whole dream of the stock market alive before the bubble pops there. That's the major, of course, that we're seeing, because it's kind of topped right now. Like, it's been moving down slightly, the stock market in the United States. So with that said, what's happening is a massive slowdown in all debt. You're seeing auto loans slow down, student loan, like all these debt have kind of topped now. It's having a hard time going further, and I think that it's reached the debt accumulation limits that society can burden.
Wow. Well, now, number 5. Last month, U.S. factory output dropped at the fastest pace that we have witnessed in more than 2 years.
Yeah, and again, that's the start of what's going to happen with the deflationary pressure that's on the economy. People are not buying all these cars anymore. Of course, it's cars, like that's industrial. And then, of course, agricultural people can't afford that much food anymore because they're freaking starving, a lot of them.
Yeah.
I talked to Americans and I was like, oh, it seems like it's so great in America. I was like, well, come to some places, for example, in California, there's so much homeless people. It's ridiculous, especially in the socialist places around in the United States.
How does that work?
A huge amount of these homeless people, but yeah.
Well, that's very sad, and we've seen that in so many socialist places, so-called utopias, Venezuela. Now, let's see, number 6. We are in the midst of the worst retail apocalypse in U.S. history. The number of retailers that has filed for bankruptcy has already surpassed the total for the entire year of 2016, and at the current rate, we will smash the previous all-time record for store closings in a year by nearly 2,000.
Okay, that's an update for the last one that we just did. Yeah.
It's an update.
There's some numbers for you, some actual numbers.
Absolutely. So moving on to number 7. The auto industry is also experiencing a great deal of stress. This has been the worst year for U.S. automakers since the last recession, and 7 out of the 8 largest fell short of their sales projections in March.
Yeah, as I said, the debt expansion in auto loans have been massive. There's massive amounts of subprime loans. It's been so bad that they have car lines of credit now. You can get a line of credit on a depreciating asset. It's complete insanity. Well, actually, your house is a depreciating asset as well. It should be, but it's not because of massive money.
And it's not an asset.
No.
It's not an asset, exactly, as we've gone over several times before, and the bubble is...
But yeah, again, the auto loans are, they're hitting a peak on all consumer debt, and that's where you see all these industries that are now struggling.
Absolutely. Now, number 8. Used vehicle prices are falling dramatically, and Morgan Stanley is now projecting that used vehicle prices could crash by up to 50% over the next several years. So that's added on to our previous point.
I feel bad for those car title loans that they're pulling out equity in those used cars. That's going to be a terrible thing that's going to unravel on top of... There's so much debt bubbles going on everywhere. I don't know even what to say anymore.
Absolutely. Now, number 9. Commercial bankruptcies are rising at the fastest pace since the last recession.
Yeah, well, again, as we're seeing, people are expanding their debts so massively that they can't afford to service it anymore. And voila, you have too much debt. Well, you have more debt than you have income. Well, it's pretty easy to calculate. Your cash flow is going to evaporate and you're running into bankruptcy.
Absolutely. Now, number 10. Consumer bankruptcies are rising at the fastest pace since the last recession.
Yeah, and again, it's this massive debt accumulation that people have not learned, unfortunately, that all this debt, yeah, they get, from the banks, get into this mortgage here and this auto loan here, take some debt on over here, some personal debt, and get some credit cards over here. So as you can see, this is just bringing us to a level where it becomes unsustainable, and the public hasn't been educated on how debt works. And for those people that have actually been through bankruptcy, I've been very fortunate. My dad ended up in a bankruptcy with his business because he was in too much debt while the economy was contracting in the 80s. So yeah, he's seen that first time. But yeah, again, when it comes to the expansion of debt has hit the limits, and people can't afford anymore, and they've gone into too much debt, and there's not enough debt to pay all of them. They're losing their jobs left, right, and center, and there you go. There's nobody to pay the debt anymore.
Absolutely. Right? Now, the big number 11. The student loan bubble is starting to burst. It is being reported that 27% of all student loans are already in default, and some analysts expect that number to go much higher.
Yeah, well, the problem with student loans is that you can't really default on them and get rid of that debt. It goes as you die, as it actually continues on, and people have to pay it off. That's the worst part of it. The bankers were able to write that in and get away with it. And of course, they worked with the government. The government is actually funding a lot of this through the banks. So it's really insane what we're seeing there. I would say we need to add a number 12 because we haven't talked about this. Yeah. That's missing from there. It's the U.S. Government debt. Which is
absolutely
at an insane level. They're at 104% debt to GDP, which is as high as it could be. There's more debt than there's actually production in the United States.
Yeah, and then the debt from the Federal Reserve as well, which is a major side that many people don't talk about.
Talking about that, I want to show a couple of quick articles before we just wrap up this video.
Okay, well, before you do that, John, I just wanted to thank Michael Snyder for the piece. It's a very interesting piece.
He's a great writer, by the way. I really love his stuff at the Economic Collapse blog, so thanks again, Michael Snyder.
And let's move on to the next part of this puzzle, John.
Yeah, well, the next part of the puzzle is what's coming next after all this debt expansion. Of course, now Mnuchin... The guy that was supposed to change things at the Treasury, he's going to make it a lot worse. Well, when it comes to maturities on debt, he's now talking about having higher maturities on the debt because 30 years is not enough. So as they roll, it's too fast of a rollover. So now they're getting hit by a whole bunch of debt that they have to, pay people. Yeah. But what they've done is they roll it into new debt. And new terms, so they're not able to really get it. They just get that interest paid from the government. So it's unsustainable as hell. And now he's looking at maybe getting 50-year maturities or maybe up to 100. He hasn't said exactly what he's going to do, but I would say that probably is what you're going to look at. And I see a dangerous takeover now of the financial side of things while Donald Trump focuses on other parts.
Yeah, the collapse of the deep state, my ass.
Yeah, you got the deep state with the of course the bankers now taking over.
That's one of the biggest strongholds of the deep state.
Yeah, it's one of the biggest ones, and of course what you see now is a Wall Street lawyer with the name of Jay Clayton has now confirmed as chair of the Securities and Exchange Commission in the United States. Now, I did a tiny little bit of research on this guy, and of course, he has been representing the sued banks like Goldman Sachs, HSBC, and a whole bunch of other major banks. It's Deutsche Bank, Royal Bank of Canada, RBC here, UBS, of course, a lot of the major ones. Now, there's a problem. He said, of course, I'm going to sit, here and I wouldn't worry about that conflict of interest. Now, I saw a funny movie, like or hate Will Ferrell, but his movie, of course, Mark Wahlberg and Will Ferrell together in The Other Guys. There you go. It's so funny how the Securities and Exchange Commission guy sits there. He's good friends with this hedge fund owner, and it's like, oh, don't worry, I'm not gonna have any conflict or interest. I'm gonna step out, but I'm gonna look at this from an objective perspective, not from my personal perspective. Like, come on, this is just a new revolving door happening in the finance industry in the United States. It's just really, really pissing me off big time what they're doing. And of course, how much power they really have that people forget. We haven't really heard too much about the financial side of everything. Even Alex Jones has talked very little about that financial side.
Alex Jones has talked very little about a lot of things in recent days, of course. But I think it's really important to point out that regardless of the president, like, this is out of his hands. This is a whole other industry, and they pull a lot of the strings, and they work on a global level, and this is much bigger than any president. Absolutely.
It's there. It's a whole bunch of people that are, of course, employed there, and they're continuing to get employed through either Democratic or Republican Congresses or whatever it is, right? And now, of course, they're looking at getting rid of, which is actually a good thing. This is a good thing that I saw. I gotta mention maybe one good thing at the end. They're looking at getting rid of the automatic IRA plans that they had set up for small businesses. I think it's great for people to actually start taking care of your money yourself and look at your own money and not let any of these guys that are controlled by the Securities and Exchange Commission, because that's the whole conglomerate, the mafia that runs everything. It's the banksters that takes all those fees from those IRAs in the United States or the 401 or the RSPs here in Canada.
Absolutely.
It's a massive conglomerate, so you need to just hit a warning, and it's a great sign that maybe you should step up and start looking at your own money instead of letting these salespeople that have no knowledge of what they're selling to you actually letting them control your money. It's sickening, and it's destroying our society, letting these bankers work with the government, because these are government plans. They colluded together and made those plans so they could get massive taxes on those people when they withdraw the money, and the banks can make the MER fees on the other side, the management expense ratio, as they call it. It doesn't sound like a fee, but it is a fee, of course. So yeah, that's the end game. It was something positive, but a little bit of a lesson there at the end.
Absolutely. So just a bottom line for this report, John, to wrap it up, what do you say to the viewers?
Well, I would say the debt collapse it has to be quite imminent again. I don't see how anything could go any further than this. It's almost impossible. We're at close to 0% interest. Of course, the Federal Reserve tried to say, oh, we're just going to raise rates up to 1%. Well, now they raised it up to 1%, and you're getting that collapse, like that collapsing.
Wasn't it like an entire percent over like 10 years or something? Isn't that?
Yeah, exactly. So
it's
complete insanity. And now they lifted it up just 0.75%, and it's collapsing in on itself just with that little. So they said that, oh, we're going to have a lot more raises. Well, now last time they met, they didn't even raise the interest rates.
Yeah.
So
well, and as we kind of talked about in the past, they want to also throw Trump under the bus to give the quote-unquote small government.
It's a great way to make Trump look horribly bad, getting
when he has no say
recession
over it. He doesn't have control of that system at all. He can kind of push it up or push it down a little bit, but the financial sector is in charge. The monetary system is
well, they control. They own the Federal Reserve. Come on, guys.
Yeah, absolutely.
How many guys do we have to say this? But of course, the general populace, unfortunately, is not learning this. But I hope some of you guys are new viewers get to learn a little bit about the dangers, what's ahead of us.
Decentralized, folks. Fiat currency always reverts to its intrinsic value of zero, always has, always will, and you need to be able to be self-sustainable and get out of this system and not look to government to save you, because the government won't save you and they can't save you. And it always makes the problem worse in the end, too. So thanks, John, for going into all this, and we will be back at you with much more. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized demonetized and censored here at Wham. Also, check our address in the description and the comments, as well as on the screen for you to scan, if you please, for Bitcoin. And also, check our link below for the Red Pill Expo, which takes place in Bozeman, Montana in June, where you could see people like J. Edward Griffin, Robert Kiyosaki, Lord Monckton, Richard Gage, Cynthia McKinney, James Corbett, Mike Adams, Ty Bollinger, John Rappaport, and the list goes on and on and on. It's going to be great. Yeah, and we hope to see you there, so check that link below. But until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change.
Bye.